Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Bitcoin market. So you can see that changes on Biden leaving of the president's rates. You can see it's minimal, not only on the Bitcoin market but in general across the board. So in other markets, Forex, stock market, everywhere. So you can see that the reaction is not really very surprising. It seems that investors and traders were more or less prepared for this step. So particularly speaking on the Bitcoin market keeps bullish context, as we said, and since our last update, it's an important moment have been achieved. So market has moved above 66 major resistance area and cancelled, now officially cancelled, weekly bearish pattern. It means that context has turned bullish. And as we said, that if this will happen, we should be ready for a challenge of the previous top. So all-time high around 74.25, right there. Not necessarily means that it should happen immediately, but still, this is some general view on Bitcoin performance in the nearest few weeks. Maybe some catalysis will be a reaction on the Fed statement next week. So we think we still suggest, or better to say, do not exclude the situation where the Fed will cut rate in July. So as we talked about this already, Goldman Sachs also suggests that the chance exists that this could happen, because based on recent political events and in general situation in the economy, timing of this decision seems perfect, because September meeting it will be already too late, even too close to the elections. And currently, well, theoretically, Fed could take this step. We will see. So on a monthly chart, as you can see, everything mostly stands the same. Price stands inside this flag consolidation. Since here we have fake downside breakout, which calls as a bearish trap, usually it leads to the upside breakout of the same pattern, an opposite breakout of the same pattern. This indirectly also supports our idea that probably market should try to challenge this area. So on a weekly chart, you could see how fast and strong this upward action. Market is not at ever bad, so we have the bullish context, but at the same time, we do not have some new patterns. So on the weekly chart, we just here could say that potential double ripple has failed, or as I said, maybe not quite failed, but hasn't quite reached the target that initially we thought it should reach. So on the daily chart, that's the levels that we talked about. So upward action, you could see that market has exceeded these levels, has broken them, but reaction and upward action here is not very strong. From that standpoint, I do not see any reasons to change our trading plan. Yes, we have great upward rally here, but at the same time we have also previous significant bearish momentum, and it still could make impact on the market. From that standpoint, personally, I prefer to follow the same plan, in terms that better to wait for some moderate pullback, so to get nice area for possible position taking, but not trying to jump in a running trade, which stands right on the top. So this common rule is buying on the dips, and I do not see currently the reasons to change it. So I think that it's a good approach in the current circumstances. On the 4 time frame chart, potentially we could get a few patterns. So one of them, for example, might be the free drive, 1618 free drive, with the point where retracement could start somewhere around 70. This is first pattern that we could consider. Here we also have some divergences growing, but this divergence is a bit tricky. It's just because market not at some fib resistance, so actually it stands in the free space. That's why divergence in general is not bad, but it's still, we should not overvalue it. So it's well, just let's take into consideration. Alternative pattern, if market will start dropping immediately, it might be the hand shoulders, because here's the ratio between this top and this one. It's 1618 approximately, so if you'll calculate it, that's typical for the hand shoulders pattern. And if you will see that market is dropping too low, returning back to the area around 63.50, 63 area, it might be really the hand shoulders that could start the downward pullback. So these patterns, we need these patterns not for trading. We don't want to take the short position currently. We just needed to recognize the patterns and use them to estimate the target, because patterns will clearly show the potential destination point where we theoretically could try to take the long position. That's the major purpose for us of these patterns. So on the hourly chart, I do not see something really special. So no significant patterns. Probably the 4-hour time frame chart that the only that we need currently to monitor the situation. So as a bottom line, market keeps bullish context. Rally was really significant, and actually we haven't got the clear hand shoulder shape. Yes, here was minor retracement that we suggested, but it hasn't quite reached the levels that we have specified. So based on our hand shoulders pattern here, this retracement should be slightly lower for position taking. But in general, overall context remains the same. So we have great upward action. We will be watching just for moderate retracement to consider the taking on the long position.